Thank you, Lata, for the great compliment. Of course, the bank has been doing well in the last few quarters with regard to deposit growth, of course. And we had given a guidance to the market that our deposit growth will be to the tune of 8 to 10%. But then we have outgrown whatever we have given guidance to ourselves. But it will be a little moderated because of the base effect. The growth was, so sharp at 13.63%. But it will be moderated, and we are hoping to keep the deposit growth by 8 to 10% in the coming quarters.
But obviously, CASA has gone down for everybody. It's also a bit seasonal, I understand. There's a quarter-on-quarter fall in CASA, in the current and savings account as well. Do you see your cost of deposits going up? How did it do in this quarter compared to the previous? And what are you expecting in the coming quarters in terms of cost of money?
Yeah. If you look at the composition of deposit for the bank, it is, 73% is CASA plus retail, and the bulk deposit is at 27%. And as of now, our LCR is close to 161%, and so we are comfortably placed with regard to liquidity. Going forward, we will be seeing a little bit of increase in the cost of deposits. In the last quarter, we saw a little growth in the spike in the rate of interest in the bulk deposits. But I'm hoping not to bring in more of bulk deposits, rather than, look at increasing the low-cost deposits, especially the CASA growth is what I'm looking at. We are taking a lot of strategies and measures to see that the CASA growth happens in the bank, and we will keep it at low-cost deposits will be the prime growth center for the bank.
Okay. Well, the negative in your result really is the bad loans. I mean, it has come down. But even now, at 7.5 or 7.34, the gross NPAs would rank among the highest in the industry. Is there any concerted effort to bring it? The banking sector is going through its best phase ever. 7 is a tall number for such a period.
True, Lata. We started the year, if you know, last year in March 22, we were at 11.11. That was my gross NPA, and we have brought it down to 7.34 now. The concern remains on NPA. The market is, almost 5.5. That's what the market is. But we have given a guidance that we will be around 6 and below 6 for the current year. A lot of efforts are, taking place in the bank to see that we reduce NPA. We have bought out, particularly verticals. We have got OSDL, that is the OTS. We are going very aggressively on OTS and the other forms of recovery also. If you look at return of accounts, recovery in return of accounts has been a major contributor for the current quarter also. And we will be considerably taking major steps to bring down the gross NPA numbers to 6 and below 6 actually.
Any expectations of recoveries, ma'am? I guess you all would have given the NARCL also some assets. You're seeing any recovery?
We have given close to about 10,000 crores is what we have given to NARCL. We have identified those accounts. And we have got, last year, we have already given two accounts. We had already got some inflows. So we are seeing, we are constantly in touch with NARCL, and we hope to see some good improvements in the numbers even this quarter. And likelihood of 8 accounts are in advanced stages of discussion, and we hope to see some good offtake from the NARCL numbers also.
Okay. The other point I wanted to ask you is about Opex. Opex is up 12%. Now, do you see any a scope to reduce it? Primarily, have you all been able to rationalize branches? I remember speaking to Bank of Baroda, and they have brought down their branches. I mean, I cannot remember the exact number, but about 5% reduction in branches over the last 2 years, because they had, common branches with the banks they took over. Could you make any such rationalization? Are you seeing improvement in costs?
The operating expenses, if you take into account in the bank, it is mainly because of the salary revision that we have made provisions, and the pension provision. That's the only hike that we have seen. That's the reason the operating expenses looks a little higher at 12.38. With regard to your next question on rationalizing of branches, of course, the bank has done a lot of rationalization. We had close to 9,200 branches when the amalgamation started. We are at 8,400 branches. We will be reducing further. In the sense, I can tell you that we will not be reducing the number of branches, but creating specialized branches out of the branches that we already have. And moreover, we are having also rural branches. We will be going in for more of BC-centric branches there, or instead of the brick and mortar branches, we will be looking to go growing in the fixed point BCs. That's the way we will like to go to branches expansion. We are seeing growth in certain pockets. If you look at my branch network right now, 59% of my branches are in the RUSU areas and 41% of the branches are in the metro centers. So RUSU are the branches where, we'll really look at growth centers for the current quarter also. And I'm well equipped on those locations. And with a BC network of almost 17,000 BC network, I hope to grow in those locations also.
Okay. So cost to income ratio that's fallen, which is, a very big positive, 43.66% at this point, a big fall from year ago levels. You see there is more scope?
No, I don't see much scope in reducing the cost to income ratio. The cost to income ratio was bloated a little in Q4 of last year, and because of one-time provisioning that we made on family pension. So going forward, we will be looking at the cost to income ratio to the extent of 44, or to the tune of 44 or 45. That's the one that I'm looking at. But we are taking a lot of measures to reduce the cost to income ratios. As I told you also, that we will expanding in the RUSU areas with fixed point BCs, and there are so many other measures the bank is taking to see that the cost to income is kept to a level of 44 or 45.
Okay, I'm assuming by RUSU you mean rural and semi-urban. It's not an abbreviation which all of us viewers understand. But let me come to, what is your SME one, the loans that are 30 days past due and 60 days past due. How is it trending, and therefore what's the year-end NPA likely to be?
My stress folio is to the extent of about 0.51% as of now. And we are taking a lot of measures to see that my SMA position or the stress book does not slip into the NPA position. In the MSME sector and the, you can say that the retail loan, there has been a little bit of stress. But then, the kind of approach that the bank is having with regard to maintaining the stress assets, it is quite comfortably placed. And even in the quarter, the slippages in MSME book was to the tune of about 700 crores and retail to the question of about 500 crores. But I'm hoping that this will be, at least to the extent of retail loans, I'm sure that we will be able to make good recovery, because this is totally mortgage based. So we will be able to have a recovery. MSME is about 766 crores is what we have slipped in the last quarter, and there also we will be having considerable recovery. We are using a lot of efforts, like we have regional collection center and the zonal collection centers. We also have a subsidiary called the UBI subsidiary, who also help us in recovery and maintaining the stress of the bank.
Okay. Two quick numbers. Therefore, do you still expect a further fall in your credit cost? Because you're saying that your stress book is under control. And secondly, is this NIM your best? You have a net interest margin of 3.13. Does it go back to 3 or does it go to 3.2?
It will be at around 3 is what I'm hoping. It will not, 3.13 was a good number, but we will be maintaining at 3. And as regards the stress portfolio of the bank, we would, last year if you look at, every quarter the slippages was to the tune of 2,500. Only in this quarter I have seen a stress of about 2,500 crores. And because here there was an issue because the two of the corporate books had fallen. And so the RAM sector is doing well. And I would like to keep my stress book to about 2,000 to 2,500 crores every quarter.
Okay, finally, loan growth. What were you expecting, and from where will the growth come?
Loan growth, see, the GDP is growing at estimated GDP growth is about 6 to 6.5%. So accordingly, we have also, seeing a growth of about 8 to 10% in the loan book. And the RAM is supposed to be growing good on all growth we are seeing in the RAM sector. And especially if you look at my RAM sector, I have seen good growth in the education loan sector, which is almost like 33% growth. Gold has grown by almost 53 to 54%. And in the large corporate, I am seeing growth in infrastructure, steel, pharma. These are the sectors that I am seeing real credit growth.
Okay. I would assume by RAM you mean retail and MSME. Again, we are weak on abbreviations. Thank you very much, Mrs. Manimekhalai, for joining us with your analysis of the current quarter gone by and the outlook. We are winding down on Bazaar on the note that the Sensex and the Nifty are